I, He got fired from Kane, now we ain't got no shame. So we started a pod, Chuck Yates needs a job.
Hey everybody, welcome to Chuck Yates Needs a Job, the podcast. It's only happened once before where I haven't been the coolest person on the podcast. This is the second time. So do you know who Jane Stricker is over at the Greater Houston Area Partnership?
I do not.
Okay, Jane's awesome. She's cooler than I am. She came on the podcast. This is the second time it's going to happen. But my guest today is Bill Perkins. I don't even know where to start. I mean, energy trader, Hollywood mogul.
I don't know about mogul, but yeah.
I mean,
I made the movies.
You've made movies, exactly. I mean, friends with Dan Bilzerian, owner of the Sugar Shack. And so, again, man, I don't know where to poker player, but let's do this. How'd you get into energy trading?
Yeah, it was quite serendipitous. I was in college in School of Electrical Engineering and really just kind of like chasing women, running around and playing football. Yeah. And my godfather gave me a call. He's like, you know, kind of one of those, what are you going to do with your life calls, right? Just checking in on me. I said, you know, at the time I saw this movie, Wall Street, and I really loved engineering in terms of like learning it, you know, when I was actually studying and the idea of it, but I didn't want to do it for a career. That part was kind of death to me. So I saw the movie Wall Street and I was like, I want to be rich. So I told them, I think I want to go into stocks. I want to be a stockbroker, right? Something like that. I want to trade stocks.
Everybody wanted to
everybody trade stocks, right? Like I didn't want to be the evil guy, but I just wanted to be the rich guy, right? Like the guy had like this big giant mobile phone and I was like, this is so cool, man. Like this guy's not worried about anything. Like how do you get a house like that or apartment like that? So because I don't know anything about stocks, but I know about this firm, commodity firm. I didn't know what a commodity was at the time. That you know they're looking for screen clerks, and that was kind of like my introduction. And I was kind of like, well, I'm about to be broke, jobless. Let me get out. And I you know called and secured an interview.
So that is circa kind of what year? Because I think you and I
it's
are
got to be
about the
1991, 90-ish.
Okay, because I'm 91 from college.
91.
Okay,
91.
yeah. So you're doing that, and then how do you kind of advance along the way?
It was kind of weird because I was a very, very big slacker in college and through most of my life, kind of like the definition of underachiever or unmotivated. And going out in the real world and having no money, not being able to get dates and living at home with your mom really lit a fire under my ass. Kind of like necessity is the mother of invention. And I was like, I don't want to be poor. And so I was a screen clerk making no money, like assistant peon. Kind of actually had to like hustle they didn't even want to hire me. They like wanted to hire another guy, Eddie Gagekins. But I just kept being persistent and they you know, staying down at the doors and like, am I starting today? Am I starting? Fine. Come out, you're a screen clerk, right? Making no money, but I decided at that point I would be the most valuable person in any organization I was in. So I wasn't going to just do the job well. I was going to redefine the job at each point where I was. Now, I wasn't like all of a sudden hit a switch and I was always consistent with that. But I was consistent enough that I never showed a resume to get a job. I always got recruited. And I just kind of like a baseball player, just moved up and up and up and up. You know, I'm in the C League and then whatever leagues they have, triple A, double A, single A, majors on the bench, you know, starting rotation, you know, signing a big contract type journey.
And so you joined Centaurus with John Arnold, what, like 2001, 2002?
Whenever we started, from cradle to grave.
Cradle to grave.
Except for one time John fired me in the middle. For a brief stint. Yeah, that's a great story. That's a really great story.
Lay it on me.
So I guess we'll jump ahead. So John started Centaurus, and I was like, oh, I'm looking, I'm going to start this hedge fund, et cetera. And I said, well, I'll come work for you as long as I get X% of my book. Except I have all these other projects going on, trying to do an LNG import facility in Central America. I had all these other crazy ideas, very entrepreneurial, kind of crazy guy doing a bunch of stuff. So I'm kind of like this contractor. I'm not really an employee. I don't even care about the salary. Just give me the maximum percent. Fuck the salary, right? I'm a live and die by the sword type of guy. John goes, okay. So you come in, we're trading, and John is very meticulous, diligent, grindstone type of guy, right? And I'm the same way in trading, except I have other things. I'm not in the office till 9 o'clock at night. I may be obsessing at night, et cetera. And I think very differently. And so I had this big run up and then a drawdown. I was still positive, but John was like, this doesn't work. You can't, can't work here. And so I was like, okay. And then I started trading on my own, but I had all this desk and equipment sitting there, right? I started trading my own PA, but inside the office of Centaurus. And I'd be grinding it out on my own, making money, making good money. And, they hired another guy or whatever. And I think it was Greg Whaley had a conversation with John, other people. It was John. He's like, so he doesn't work here, but he's here. And he was going. And I think the kind of logic is that, and I may be paraphrasing this, and John maybe call in, and if this was live, he could call in and get John, because I wasn't privy to this conversation. But the summation was like, basically, John was like, nobody thinks like him, like nobody. And Greg was like, that's exactly who you want. Right. So they hired me back. So it was a brief stint, and I wasn't really hired because I was never really an employee. I just had I'm back under the part of the Centaurus team again with a Centaurus book.
So this is me and Digital Wildcatters. I mean, I don't work here. I do a podcast. I show up every day.
Yeah. And the rest is kind of history. I was the second most profitable trader in Centaurus. I made them a 1-point-something billion over my tenure there. John obviously was the most profitable trader. Well, and then he called in and retired. Called in rich.
I meant called in rich. No, so snarky me as a young investment banker, John starting Centaurus. I think my offhand remark was, well, if I owned every energy asset in America, i.e. at Enron, I'd be a great fucking trader too. Yeah. We'll see how well this works. And what was interesting about that? No. Do you want to trade out chairs? Yeah, trade out chairs. Colin, who you just met, I've made a whole career of followers on Twitter by claiming that Colin's short. Right. People will come into the office and they'll tweet out, oh my God, I just met Colin. He's not as short as Chuck says he is. Yeah. So anytime the chair malfunctions, he's a short guy, right. So what can we do? But no, so I said that about, Centaurus, the startup and all. What I found really interesting was John came on Colin and Jake's podcast, and he said his biggest fear in terms of going on his own was could he replicate the information he had for his model. And he said going out on his own, he knew the certain filings he needed to ask for, and he was able to replicate 95% of the information in his model. And he said that's what gave him the confidence to actually go start trading on his own, was he was able to replicate the information. And he figured that out because he had all these assets at Enron.
The investors in the world didn't have that same confidence. Right. There was a lot of people saying, oh, yeah, we'll be there day one. We'll show up with the money, but they didn't show up.
Yeah, nobody ever shows up.
Yeah, they showed up with John showed up with his money. And then after 3 months, people were like trying to flock in and invest. Yeah. Right. Because we were just killing it.
Yeah. No, it's it was funny when I got fired from Kane. They started the conversation with, well, we've had such a good partnership for 20-some years, Chuck, that, we're willing to waive all the non-competes. And I was kind of like, well, oil's at minus 37, and nobody's going to invest in a first-time fund anyway, right. Just when you go out on your own. I was like, here's my position. I'm willing to take a lifetime ban from the industry. That's my side of it. So let's start the negotiation there. But yeah, no, it was interesting listening to John talk on their podcast about how he had his model, and it really was kind of fundamentals driven. And so I'd love to hear how you think about trading. Yeah, I don't get it. I'm a private equity guy.
We're very, very much a fundamental shop. My hedge fund is a fundamental shop that came out of it. We're I'm not as much a University of Chicago type guy, efficient market guy. I think the market is actually fat and quasi efficient. But we believe that at the end of the day, a willing buyer and a willing seller have to meet, and the fundamentals drive the price in commodities, and that delivery is a forcing function, right? And so when you say that and you believe that, if you're going to trade that market, it's really incumbent upon you to know every single thing about the market that can drive those fundamentals, that supply and demand balance. And so we invest a lot of resources, time, neurons into understanding the fundamentals, what's currently going on, and also a lot of what if, right? What will be the thing that causes it to move in the future? The trends, the trajectories, and kind of like probabilistically thinking, which is what I did a lot. I think that was a little bit different from now. I think everybody does that, but back in the old days, a lot of my positions were um, not a favorite to happen, but a high positive expected outcome. And so when they did, it was kaboom, right?
Yeah.
And it was a lot of fundamental analysis and going, these options don't represent the price distribution correctly. I understand, you know what I mean? Like whatever it is, the skew is incorrect, et cetera. These put spreads are too cheap. These puts are too cheap, X, Y, and Z. There's, maybe there's a different options model that should be covering, et cetera. And I would just use whatever tools were in the market to express that view.
Give me one example of that, because I've always been, markets are efficient, they're billions of dollars, there are tons of really smart people, trading on both sides. How can you find this? Now, I will also be the first person to say, if you look at the oil futures over time, they've only been right 30% of the time. But
Yeah, I think there's billions of dollars, and I think there's smart people, but that doesn't mean they're directing their neurons to that problem in the way that actually gets to the correct answer. Um, and so when you're a specialist and you've really hoovered it in, and you got some macro strat guy coming in, or the permalength or the hedgers, it creates distortions in the curve and opportunities. I often say that we're insurance agents, right? We are risk warehousers, and we are induced to put on trades based on what the market is doing, right? Whether it's hedging because they're don't want to take the risk of a cold winter and the price is going up. They're producers ratably selling the summer, and it's too cheap relative. There's distortions based on the flows in the market. Inflation hedgers who are perma long the front. There's all kinds of reasons why people are interacting with the natural gas market, and that leaves a footprint. And that footprint overlaid, we overlay our fundamental analysis on that footprint. And when it gets out of a certain range and a certain amount of edge for us in our minds, in a model, we put on the trade. We're not out there, Yahoo! So,
Right.
right? We actually get induced to every position I have. I'm induced to put that position on.
yeah,
Right? I'm like, oh, you want to sell it now? No, I don't want to sell it now. No, wait, this is ridiculous. Like, how could that be? Look at the S&D here, and the weather, and the so and the outages, and the supply, and the solar installs, and the wind, and everything that's going on, all layered out. And I'm like, okay, I'll sell it here. Right.
right.
That's how it happens. Right. Or I will buy it here. Right. These things. And you have to know about how supply changes and how demand changes with respect to price. And you have to know it well.
So if you were, and I told you didn't have to dummy something down for
Yeah.
the audience, you have to dummy it down for me,
Okay.
unfortunately. But if we were to think about you trading on top of your fundamental analysis, is it a chicken pecking for corn and you hope you get 51% of the pieces of corn? Or is it more like a lion sitting there waiting for the caribou to walk by and jumping on top of it? Or is it somewhere in between?
Yeah, when I first started, I used to be a market maker in options and derivative products and exotic products. This was before they even cleared like things called spread options and CSOs. I actually got the exchange to put those products on there because I used to make them over the counter in derivatives market. And my reasoning is that if these were tools, but I am way ahead of everybody's understanding of it, particularly the banks, because the banks would look at it like a financial commodities, a currency market, right? And they put in their models. And, March, April, and commodities have different distributions than the normal distributions they put in their model. right? Even the floor, and made at the time a relative killing trading CSOs. Now everybody gets the trick, right? And it's done. And so I used to make markets, scrape edge, et cetera. And then I realized, like, when I'm making markets relative to what I think I can get out, making a penny wide, 10 ticks wide, the mid, let's say, is, that means at most I'm getting 5 ticks edge plus brokerage, plus maintenance, plus whatever. And then I could be wrong because this guy's executing off our information he has or something, or flows, et cetera. And I was just like, this is not the real game, right? There's guys out there with HFT algorithms and charts, et cetera. I was like, let me stick to the fundamentals. And in natural gas, the primary instrument that I trade, we also trade power. It's a seasonal game. We have an injection season and a withdrawal season, right? And because storage is limited and infrastructure is limited here in the United States, you can have scenarios where the price goes very, very high in the winter, right? If you don't have to induce demand destruction. Or we can have a thing called containment, where there's not enough storage for the gas, right? Your minus $37 crude thing, which I really think was the exchange's fault, with liquidity and limits on people, and basically nobody traded the last 3 days because of the limits, and they don't want to have to deal with regulators like, why are you trading? Why are you doing this? They don't have time to answer 1,000 questions about their trading, right? And so everybody was out of it, and there was a liquidity crisis. It goes negative, and then it pops up on the last day, correctly as it should, right? And delivery is many, many days after it goes off the board. There's no version of the people delivering negative crude to Cushing. So it was just absurd. But anyway, in natural gas, you can have containment issues, right? For a month. It's not going to go negative for a month. One day, could something print negative? It happens all the time, right? In certain locations. And so these containment scenarios, or these run out scenarios, right, and the probabilities associated with them drive a lot of the positioning, right? It's the juicier trades are when there's like, wow, there's a significant chance of containment and the market is not pricing this, or there's a significant chance of we have to destroy a metric fuck ton of demand and the market's not really pricing this correctly. So I have kind of like battleship positions. I put them on and I sit on them, right?
Right.
Yeah.
Because, saying that makes a lot of sense. I mean, I understand kind of storage. I understand pipelines,
Right.
to some degree. But I just asked myself a question while you were saying all that. How many times does that happen a year? And I'm going to ask that question of you, because if you answer it happens once every 3 years, I would believe that. If you told me it happens 47 times a year, I would believe that too.
No.
I don't know how to wrap my head around that.
I mean, what happens is that let's just forget this winter for a second. Let's look at next summer, right? And I think there's I'll just go say it. I think there's a significant chance of containment, and also I think the containment, the level in storage where prices start to have to go lower to induce demand and then possibly induce shutoffs, is actually lower. And the reason why is because the infrastructure that we put down on the Gulf Coast has lots of LNG export facilities. And these LNG export facilities have long-term contracts and whatever, but things break, which means they need no notice storage and they need some salt storage just in case shit goes awry at the facility and they got to jam a bunch of storage in the ground. So let's just say, over the past 5 years, a significant amount of storage that the market may have used to balance itself is unavailable, right, to the market. It's sitting there and must be available to the salt guys. So the effective storage is actually lower. And so, I'm looking at it, I'm like, well, we got the winter, and the winter, weather can cure all, right? And so I'm like, you know what?
That's actually something the kids that listen to my podcast probably don't even know, because kind of the shale revolution to some degree, winter kind of went away as a big factor on natural gas. Guys, back in the day, it was real.
Yeah, it's back to being real, because we've shut down a lot of coal plants. We put down a lot of intermittent generation, including wind, and those, there's kind of like these correlations between low wind and cold weather. You have freeze-offs, right? And now we don't, now when you go up $3, you don't all of a sudden induce a whole bunch of more coal gen, right?
Yeah.
Coal, you know what I mean? Like
We don't have it.
you don't have the coal capacity, right? Maybe you get a little bit of ethane rejection, but the ethane rejection tends to be split between the hub and west, and they're at a different prices, so you don't get as much ethane rejection as you thought. So the breaks on the way up are they're kind of missing, right?
Yeah.
Until we get to global gas prices and we leave some LNG here, but those global gas prices are, almost infinity
Right.
for all intents and
Yeah.
purposes, right?
Yeah.
If you're short past your point of blowing up, right? And so, and then in the summer, because we were talking about next summer, you have kind of this reduced capacity to inject, and you have a lot of gas flowing into the Gulf, right? And things go wrong, and we need to induce demand. It's like, well, we're already running all the gas we can, right? You know what I mean?
Right. Yeah.
I mean, we may run a little. We may run a little bit more, as I guess down on coal switching channels. You get a couple Bs, maybe B and a half, down at down sub 450, 350, and then what do you got? Shut-ins,
Yeah.
and so that's a great trading environment because and that's kind of what we do, and that's kind of what we look at is like, is this a fair spread? We look at the outright price? Does this seem right? We're going to go into containment, or are there spreads properly priced for the risk? How are these interspread relations? What does volatility look like in this scenario? How does it manifest itself? What could go wrong with our forecast? We're constantly measuring, making a forecast, measure, right?
Yeah.
And pulling in data.
There's the engineer in you coming out.
Yeah. Measure.
Yeah. No,
I mean, we pull in tons of data. We use lots of tools. I've built lots of tools. When I was at Centaurus, I was pretty proud of that, and I've built tools inside Skylar. And I just recently took my CTO out of Skylar to actually build those tools and make them available for sale. And it's kind of like, well, people are like, why are you doing that? And the reason is that my AUM, like commodity long short fund, it's really hard to raise money.
Yeah.
People just want to be in stocks.
Yeah.
Private equity. What stocks you got? Well, every time I go on CNBC, they want to talk natural gas, and they're always like, well, what stocks? And I'm like,
Right.
they're like, what stocks are you going to recommend to us, right? So I always have to give them a couple stock recommendations for whatever view I have.
Right.
But really, I'm just like, put your money in a long short commodity fund. It doesn't even have to be mine, right? It could be Copperwood. It could be myself. It could be GeoSol. It could be any one of these guys, like that's where you're going to make good returns uncorrelated to everything else.
It absolutely kills me, and I may get the date. I may be off a day or two of this, but I believe on April 21st of 2020, the second most Googled question in the world was, how do I invest in oil? And the number one answer was USO.
Yeah.
And USO is such a shit show. I hate to say,
Yeah.
I hate to speak ill of a
of
product.
it,
Maybe
yeah.
I should.
Yeah. I
But-
mean,
And
it's,
that is kind of my soapbox since I've been out of the game,
Right.
if you will, is probably about, I'll make this up, 85% of all the dollars invested in energy need to just be based on beta. If you're a taxi cab company in Las Vegas and oil prices go up, your business is going to suffer a little. You should probably be long oil. It ought to be used. If you're Amazon, you ought to be long oil. You got these trucks running
Yeah.
everywhere delivering stuff. And probably 20% should be out chasing alpha. And unfortunately, I think it's the rest. You got 80 or 90% of all the dollars in energy chasing alpha, drilling, hedging, and it just distorts it into a big mess.
Yeah. And that's good for, that big mess is really good for guys like me, right? 'Cause
Right. Yeah,
We're
exactly.
just long, short, discretionary commodity traders, and these curves get all kinds of out of whack, right?
Yeah.
And, it's a golf game. I'm not competing against any of the other hedge funds. I'm competing against the course, right? The market's huge, right? I'm a gnat on a screw of the machine,
Right.
relative to the size of the market. And so, but it is what it is. I guess the benefit is that because, using the analogy that we're insurance agents, there's so few dollars in the insurance agent table, the premiums are extremely fat. So my theoretical edge has really gone up Like back in the old days when there was a Dynergy and an Enron and everybody and their brother was trading commodity derivatives, every single thing that had any kind of positive expected outcome was driven down to like nothing, right? Like you'd really have to be a probabilistic trader on like, well, if this happens, this is what they're missing, right?
Yeah.
That type of thing. And I think that's part of the reason why I would have those type of trades on. Now it's just really, really fat, lots of edge. More dangerous because there's a lot less liquidity, but the margins are super fat.
And am I thinking about this right? Because oil and gas companies are out there hedging, et cetera. So, let's face it, a lot of that's just management preservation acts, right? You
Right.
know, if I hedge and pay
Right.
down my debt, I've got a job in 5 years, and the like. And so the pure person like you that's sitting there saying, hey, I think, you know, going long natural gas in the summer, or going short natural gas in the summer, there's so few of that.
Yeah.
That's what you're talking
Yeah,
about
I'm saying like, listen, the producers
on your premium?
like every year the producers sell like 1.3 million lots ratably in a calendar year. Somewhere around there, 1.2, 1.3. You can look at the hedge ratios of public companies. Plus, there's some privates out there, et cetera. It might even be higher. And there's the perma length, right? Goldman Sachs Commodity Index, right? They're always long the front, right? There's the inflation hedgers and all the funds that mimic them. And then there's small non-reportables, and these are they're always long, right? I think the shortest they've ever been is flat, right? Like they're like T-Boone Pickens. I'm either long or I'm flat, you know? Right? So that's kind of like the structure of the market, right? And so the general job of the risk warehouser was to take this ratable length and convert it into shorts in the front, right? At some price and watch it roll and make money, right?
Okay.
And then you would do that or not do that, or maybe even go the opposite way based on your fundamental overlay. Right.
Right.
That was like kind of like what paid us all. Right.
Yeah.
And so, you know, there's still hedgers out there still having to protect their cash flows, satisfy the banking, right? I'm not loaning you this fucking money to go drill these wells unless you hedge X% of your portfolio, right?
Exactly.
Or satisfy investors or whatever it is, right? And then you also have, on the other side, now you have some demand side hedging. You know, in the winter, you have, you know, utilities do some hedging. They usually like to do weather swaps because they have kind of like this weird relationship with weather. They want it to be cold, but not too cold, you know, that type of thing.
Right.
And then you have now the new hedgers, the LNG buyers in the strip coming out trying to offset some of the producer hedging. And so you have different infrastructure coming in at different times, right? The pipeline comes in, but the LNG export plant is in there. You know, the gas plant comes in, but all the gas fields aren't gone. So like this creates distortions in the curve, both with the hedging environment, and it also creates distortions in kind of the fundamentals because they're lumpy. It's never smooth. It's never perfectly executed. So supply and demand matches perfectly. And you need risk warehousers for that. On top of that, like the big coup de grace is the penetration of renewables, which essentially, whether you agree with it or not, the market is pushing that volatility. You know, we have this cheaper source, but higher volatility. So the net cost is really the same. Somebody's got to pay it.
Right.
Right.
Yeah.
And we pay it in volatility. Right.
Yeah.
So you see it when the wind doesn't blow and ERCOT misses their forecast, like power prices go skyrocketing. Right. Because we got to like turn on everything you got, turn off that, turn off this. We're going crazy. Right. And then, or, you know, one day it was like, well, everything looks fine, but it happened to be cloudy in West Texas.
Yeah.
And so we didn't have the solar we needed. You know what I mean? So it was a hot day, but when it was weird days, et cetera. And so these things, you know, people that are in the weeds trading power, like they're all over it, right? I'm not in the weeds trading power, but I'm keeping an eye on it for demand. And this volatility is going to more and more fall directly on the natural gas market because we're getting rid of coal, right? We're shutting down coal plants, like ESG movement out of crazy. So it's like, all the coal, all the gas is doing all the heavy lifting. It's handling, those power plants are handling the volatility. Our storage facilities are handling that volatility, right? And thus the risk warehousers, myself, right, and all the other fundamental traders, we got to absorb that volatility. And we're like, okay, but you got to pay us. Yeah, you know, we're gonna get a fat charge out of this. And you know, the LNG aspect, the volatility associated with that was amazing. Like it was extremely bullish until Freeport LNG blew up, right? And then it was just like, wet blanket on that fire, right? And then,
Yeah.
and then it's like, holy shit, now we're bearish, right? Supply is now doing what we expected to do. It's growing, 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 growing. Freeport's off. We've kind of like filled the gap, and it's not like producers aren't going to try and take the money that's out there. It's going to keep growing, maybe not at the same rate. And now we're kind of looking at a bearish setup going into 2023 in natural gas, right?
Well, and I think it's something that's scary that I haven't seen heavily reported out there. There are a whole lot of shutdowns on LNG refineries and the like of a fire. I've got a theory this is some cyber attack thing going on. People I know in the industry are like, no, it's just we fired all the old guys at the downturn. Now we got a bunch of kids running the plants and they don't know how to do it. But I think stuff like that happens more and more
It-
in the future than
I mean,
previously.
Things break. I mean, when you read whatever you can get your hands on with the LNG, what happened at Freeport, and we hired 2 consultants. We have tons of data. We're always flying around and taking pictures and stuff to understand when they're going to come back on. But it really was like just kind of like management neglect, right? Not properly trained people. The
Right.
training program was like, hey, just follow this guy around and then you learn it and then you're the guy. But you don't really have any institutional knowledge. Like when the pipes are banging, like, hey, this is a sign something's wrong. We got to shut it off.
It's
right?
bad wrong.
I think any 7-year-old will know if you hear the pipes clanging, like something's wrong, right?
Yeah.
Like you don't just ignore that. But I don't know, so, and you just see things like these complex industrial facilities, things go wrong, parts wear out, they break, they're near water, they're near salt water, for God's sake. So like
Yeah.
there's just a lot of things could go wrong. And when they go wrong, it's a lot of gas that all of a sudden has to find a home.
Yeah.
Right. And if it's an extended outage, like a hurricane, or, that time when we had the hurricane and the anchor dragged and it sunk a ship and it blocked the
Right,
channel. I mean, just weird stuff happens all the
How
time.
was that in your model?
Yeah, that was-
yeah. Didn't have that on the
I don't know
bingo
how many
card.
satellite imageries I bought to like kind of track that, and looked at like the draft of LNG ships and searched the world with like, all right, what's the most minimum draft? Because they restricted the draft. You just do a lot of homework to try and figure out what can and can't happen when these events happen. And, most of the time, when the event happens at first, we have this like, oh shit, right? Like, especially when your position is the opposite
Yeah.
of what happened. But then I'm always like kind of thankful for some of these events as long as nobody gets hurt, because that creates, the market tends to overreact
Right.
or underreact, right? It never gets it perfect. And that creates edge for me.
Yeah. Yeah. No, it's amazing how these pieces fit together, because I will be the first to admit I totally missed the associated gas story. Oil's at 125, shale
You miss it.
revolution.
Yeah.
We're drilling, and I keep going, why are we not getting anything for our gas out in the Permian Basin? And all our CEOs go, I don't even give a shit. We're
Nobody
making so
cares.
much money on the
Nobody
oil.
cares.
And it took me a while to figure out, oh, okay, that makes sense.
Yeah, I think it's more the environmental aspect of it, and they're saying like you can't be flaring this or putting out. You got to stick it in the pipes and ship it, and they'll be happy to ship it once the infrastructure is there. But that's the great play, like just kind of like a marketing for risk warehouses in general. Not even my fund, like fuck me, right?
Yeah.
Like just in general, like we always used to say, the joke is the name of the game is to stay in the game. If you
Right.
don't blow up, the market will present outsized opportunities and outsized returns. And if you look at kind of like what's going on in energy in general, both crude oil, natural gas, renewables, LNG, power, you have massive amounts of steel going here, going there, doing this, whatever, affecting the supply and demands. That's lumpy, right?
Yeah.
And it's going to create these massive bull and bear scenarios where you're going to be able to profit because you're the guy and paying attention, right? Like
Yeah.
you understand it more than anybody else, right? Other people have their other reasons for why they sold or bought, right? Which are rational to them. But when you look at the curve is completely out of whack.
Yeah.
And it's going to be more out of whack on a go-forward basis.
Yeah. No, that's interesting. I think you've almost talked me into markets aren't efficient. I've always been a markets efficient guy my whole life.
I mean, there
but-
couldn't be a Centaurus if they were efficient, right? Like, how did we make all that money?
Yeah.
How did I consistently make money for 10 years straight? Now, another 10, 20 something years, I had like one or two down years.
Yeah.
You know, they're just fat.
Yeah. No, and my snarky response is
Yeah.
always: you fill Rice Stadium and you flip a quarter, somebody's going to flip heads.
Somebody's
20
gonna be
times
so
in a row.
maybe we're the
But-
head flippers, 20 in a row. But I've just seen it. Like the guys who stayed in, the guys who really do their fundamental homework, the guys who I like respect their opinion when I ask them, "What's your end of season?" or "What are your power burns?" or "What do you think is going to happen here?" They seem to be fairly consistent. The reasoning and everything makes sense. That's what they thought about John. Like, oh, with Enron and the machine, you can make a bunch of money. You can't make it on your own. And I think John is kind of like this, just kind of this like schism about him because he's a market efficiency guy, but yet he exists.
Yeah.
Right. So how could you exist if the market's efficient? Right. Like if John, and we used to say that if John was an outsider, he would have never invested in himself.
Right. Exactly.
Because he's such a market efficiency guy. And it's just like we'd have so many philosophical debates in Centaurus. It would just make your head spin.
Well, and the snarky response you can make back to me is, Yates, you spent 20 years convincing institutional investors that there's boots on the ground knowledge in Houston and that those Wall Street guys don't know what they're doing.
Yeah.
Right? Because we
tell a story. We all have our biases and we tell the story. I'm just kind of like, in the beginning of the natural gas days when deregulation first started happening, the markets would just look ludicrously flat, right? And the brokerages reflected that, right? Brokerage used to be like a half a penny or something like that,
right.
And there was just lots of hedging and stuff and slop, and the market didn't have the infrastructure it needed. There was not enough storage for the way the industry was growing. So we have scenarios where you could have containment, right? Too much gas, and then the winter following, not enough gas, right? Because the system didn't have enough storage, right? And because of the way we're building our infrastructure and the way we're layering things on, we're heading towards that again. If you look at the last 5 years, we really haven't added that much storage. But look at what supply has done.
And I don't even, and so now I'm going to put you in kind of forecaster role here. I don't know that we really can build a lot more infrastructure. The FERC is now 3.2. Well, it's 2.2 because Manchin, I think, is going to withhold the approval of the third guy. But, they've changed for the first time in 20 some odd years the approval process. And now they can look at what it does to climate change. And that kind of gives the Democrats, and I hate to be political here, but it gives the Democrats the ability to say no to stuff. So I just wonder how much infrastructure we truly build going forward. You've got a better insight into that than I
have.
do.
So I've done a development project in Nevada called Townsite, which is now owned by Arevon. They bought it out, which was originally Capital Dynamics, and we built this large solar facility. And I was quite amazed at how difficult it was to permit and get that facility up and running. We just sold. Did I sell it like 3 or 4 years ago?
So you maybe are permitting 8 or 9 years ago, something
like
that?
So, you start the dev, et cetera. And now I'm working on Townsite too, a smaller, just facility, working with the BLM, et cetera. But like the chart of things, like I remember one time they called me, this is kind of funny. They go, well, I said, well, are we done with this? Or have we gotten this approval? He goes, no, we got a pet cemetery issue. And I was like, Stephen King, the fucking book? What are you talking about? Pet cemetery. He goes, well, 2 miles away, there's a pet cemetery. It's not a historical site, but it may be a historical site, they think. So they want the Historical Society of so-and-so to comment that our solar panels won't reflect and interfere with the eyes of people at this pet cemetery that's closed, like a cat cemetery. And I was like, you're fucking kidding me, right? We're being held up. And on top of that, you can't be done electronically. It has to be done snail mail. We have to write the guy, send it to him. He has to send it back. They will not accept email, PDF, or DocuSign or whatever. And I'm literally pulling out my eyelashes or something. Like, I'm like, what? Are you kidding me? And I'm like, are they really like? So think about how many ways a nefarious person on the other side can try and delay your project. And delaying a project is killing your project.
Is killing it. Yeah.
That's what the game is, right? They know that ultimately, if you're willing to go 15 years, you may get your project, but you just run out of money. Like delay of the game. And so
I'm cutting you off real quick just to commiserate with you. The bane of my existence for about 10 years was the blunt-nosed leopard lizard. We had North Kettleman Dome, or Kettleman Middle Dome in California, this old oil and gas field. Chevron had abandoned it. We put it all back together. We're going to go in there and drill. And it pops up that we have the blunt-nosed leopard lizard, which is an endangered species. We literally had to hire a biologist. Every time one of them died, we had to have an autopsy on it to make sure our oil and gas operation didn't kill it.
Oh, they'll go grab them and put them on your land just to fuck with you.
Oh, yeah, I'm sure. And you know the reason that the blunt-nosed leopard lizard is endangered? Because it's the dumbest motherfucker on the planet. Trucks would come in and they'd run and jump into the side of it. And we're just like going, Darwin talked about this.
Yeah.
But anyway.
I mean, it's there. And so I don't think people really understand how hard permitting is and how much the administration can make it hard or impossible for you.
Yeah.
And to me, it's concerning as like an American citizen because energy security is national security. But as a trader, I'm like, yippee, motherfuckers. I'm like, it's on. You know what I mean? Like, I don't care what you do. You build too much infrastructure, too little, you put this here, whatever.
Yeah.
Like, I am in the weeds. I understand everything that you're doing. I hoover in data. I'm here to like make money. You're just going to create volatility, which makes guys like me fat.
Yeah.
Right. So I don't have to brag about me, just the whole squad of us, right? Like we get fat.
Yeah.
Right. Because you guys are fucking around playing politics with lives.
Yeah. No, and I mean, you're right about that. Cause I say on the podcast all the time, when we buy energy from authoritarian dictators, bad shit happens. I mean, it just does. Wars happen, people die, people freeze, all that sort of stuff.
Look at Canada, right? Like somebody was tweeting, it's like, oh, look at all the LNG Qatar's going. We have all this gas, and we had 15 LNG permits, and they didn't put up. And I was being snarky, and I was just like, didn't you get the memo? Canada's job is to send cheap hydrocarbons to the USA, and that's it. Get the fucking work. And that's kind of what they do, right? Like, because their whole, body politic is about like, more about, and I'm not saying it's right or wrong, but it's more about like some global concerns than the local concerns.
Yeah.
Right. China doesn't give a fuck. They'll build they'll build a whole US worth of coal plants in a year.
Yeah.
Right.
No,
they're like, they don't give a rat's ass. Go ahead and do all the things you want. Like we're about our energy security and people here. Right.
Yeah.
And they're doing it with the worst hydrocarbon, right? In terms of emissions, radioactive nucleotides, carbon emission, nitrous oxide, particulate matter, et cetera. The worst one, right? And you got guys in the Northeast, like, they may run out of gas. And the Marcellus is right there because you can't get a pipeline in. And so, like, these things just, you rack your brain. You hate to see it happen, right? Like, it's like, oh, you don't have to die. You don't have to kill these old people. And people think I'm joking when I say you don't have to kill old people, but like being cold in the winter is a huge factor in elderly death.
Totally. And
so when they were talking about lowering the thermostat in Europe to like 67 degrees, I was like, do you understand? Like there's little recommendations. Like you cannot do that if you're a certain age.
Yeah.
Your body cannot handle that and it creates stress and you die. And there's so much so there was a public, I remember it's quite a while ago. But there was a very mild winter and there was a public funeral home and they had bad earnings. And they was like, because of the mild winter, we had less deaths than expected. So literally they can weather hedge for their deaths going through their funeral home.
Yeah.
And so, these are real, everybody thinks these decisions, they're signaling and they're virtuing. I was like, there's real world consequences immediately for some of these decisions. From the trading perspective, because this isn't a political show or a, you know what I mean? All right. Like from a trading perspective, all I see is opportunity. Yeah. Like I have to be, I have a responsibility to my investors, my LPs, et cetera. They pay me to put on risk and to make them money and seek the opportunity. So I look at everything from like, okay, how am I going to extract value? What does it say about the market, et cetera? So I'm very, very stoic and very robotic about it. But as a human, as an American, I'm pulling my hair out. Well, I don't have any hair on, but eyelashes out.
No, that's right. So Colin and I do another podcast we call BDE. We call it the weekly summary of the energy business for people that think Jim Cramer sucks.
Right.
No offense, Jim. I actually like Jim. But anyway, and we always end the show with finger of the week. We got this little video of everybody shooting the rod, and we always give it to somebody that has maligned the energy business in what we believe is an unfair way. We've had to retire the award because Senator Warren would win it just every week. She would say something or do something.
Yeah, she's
because I mean they had a day. To your point, I mean, okay, so we import LNG in Massachusetts, which is ridiculous because in effect what we're doing is we're basically taking
from Russia.
We did from Russia, but even we're taking it from in effect Trinidad, and it should be going to Europe. I mean, the Europeans
we do it for Trinidad, we do it from Russia, we do it from other places, and it's because of the Jones Act, and so there's a lot of
Jones Act's horrific.
So it's horrific, and it costs American consumers, and it's a anti-national security act, in my opinion. It needs to be abolished. But
tomorrow.
It probably one of the most polluting things besides biodiesel, is the Jones Act. There's so much trucking and stuff that goes on, inefficient shipping that goes on because we do not ship from port to port.
So this is a wild thing Colin and I have talked about on the podcast, and I actually kind of believe this, but I haven't researched it enough so you can punch holes in it. Is one of the greatest decarbonizers on the planet besides the tree is a whale, because when the whale dies, it's got about 33 tons of carbon in it and it just sinks to the bottom of the ocean, right? And so we've taken our whale population 200 years ago, let's say it was 5 million. Today it's about 1.2 million, and it's hard to really grow that whale population because of all the ships going everywhere, because a young whale's always curious, right. Comes up to the ship, gets hit and dies. So it's hard to grow our whale population. So not only are we losing the decarbonization of a whale dying and taking the carbon with us, what they figured out is about 40% of getting rid of CO2 out there is plankton, you know? And the best thing for plankton on the planet is whale shit. I mean, because of all the nutrients that come out. I mean, that's the big... And so we have less plankton, we have less whales because of all the ships going everywhere.
Yeah, I can't push back on that. I would have to research it. But what you're really pointing out, and I've seen some documentaries and stories on how interconnected our ocean is and our environment, et cetera, and that fucking with the environment and these systems causes consequences.
Yeah,
right?
To your point, it's second order effects on all this stuff. Yeah, because I mean, it's crazy. They had a day last winter where 25% of the heating in the Northeast was driven by heating oil because they don't have a pipeline from the Marcellus.
It's
we had to send.
They got to burn coal. They got to whatever. And the thing that's really decarbonized America, the reason why, without carbon caps or any kind of rules or regulations, et cetera, the reason why our carbon emissions have flatlined and gone down is because of natural gas.
Yeah,
cheap natural gas.
Yeah.
Because natural gas is eaten into the coal stack, which is the most carbon intensive fuel, and natural gas is more efficient. You get more electrons, out of it and through the turbines. It's cleaner burning, and there's less carbon, nitrogen oxides, et cetera, PM10, all those things. And so that has been an amazing accomplishment and have saved literally hundreds of thousands of lives.
I saw a stat the other day that we are per person at CO2 emissions that are kind of rivaling us coming out of World War II.
Yeah,
we've declined our emissions that much.
So I'm not saying we can't do more, but one of the ways we could easily do more, the low hanging fruit, is more natural gas burning plants.
Yeah,
right. That's easy, and they're energy dense. They're not as energy dense as a nuclear plant, right? You'd rather have a nuclear plant than a natural gas plant, but they're energy dense. They serve a lot of homes, and when you bring in cheap natural gas in a lot of regions, say that you obviate the need for coal.
I mean,
you can baseload these things.
The Marshall Plan, if you will, of the current day to deal with CO2, and I don't know that you could pull it off with China just because of the geopolitical tension there, but we could do it with India. Is you ought to just go finance the U.S. government ought to finance natural gas infrastructure in India. Just hey guys, skip coal.
The problem is that like this is my opinion, and my observation is that the true environmentalists have been hijacked by radical lefties who really kind of have this like anti-human, nihilistic, narcissistic approach. It's not really true. Let's put in policies that really affect
Right.
the environment. Actually, a lot of the policies and the things they support actually hurt the environment.
Yeah,
Actually lead to bigger disasters. You can just look at Germany and their situation.
I know.
They're burning coal like it was going out of style, despite the wind additions, et cetera. They shut down their nukes. That was for some environmental reason. I was like, I didn't really understand that. So I'll never understand that. And so, and you have that here, right? Like but why? Let's look at the net impact you're going to have here. And then, there's kind of this idea is like, well, let's look at the net impact of solar environmentally and what happens here and the mining and the minerals and the carbon that goes into it. And when do you get the return and all these things, right? And the intermittency and what happens when the sun's not shining and then you have these batteries and then you have to go to some other fuel. And then you just wind up, they just do a lot of things that are not necessarily efficient and sometimes counterproductive. And so I see chaos ahead.
Yeah.
Right. Like when people say, oh, we're going to meet these CO2 targets, I'm like, fuck no, we're not.
Yeah.
I mean, if there's one bet I can bet on, I would bet against that because I look at the policies. I'm like, these are not effective. But if you just told me, hey, the policies is we're going to launch, 20, 30, 40 gigawatts of natural gas plants, I'd be like, oh, we're going to fucking crush carbon emissions.
Yeah.
Because there'll be no coal burn. You know what I mean? Like,
Yeah.
we're going to replace every coal plant with a gas plant. I'm like, oh, we're gonna cut our carbon emissions, et cetera. So mostly all our carbon emissions reduction has been from natural gas.
Yeah, totally. We
replacing coal.
So here's a digital wildcatter story that I love to tell, and I will give props. So we just did our Fuse conference, and the whole point of Fuse was if you make energy, i.e., oil and gas, solar, whatever, show up. If you move it, distribution pipelines, if you use it, everybody show up. Let's all talk and quit shitting on each other like we normally do. Let's actually talk. We'll talk technology and how we can solve all this. So we had Toby Rice come and talk, and he's really incredibly eloquent about natural gas and what it's done, and I think he's done a really good job of educating. So anyway, he does a speech, and then from the stage at Fuse, he does a CNBC interview, and the reporter ended the interview with, that was Toby Rice, CEO of EQT, from what appears to be a rock concert in Houston, Texas. So we're going, okay, cool.
Rock stars.
Our energy conference was a rock show. But yeah, no, you're absolutely right. I mean, we could sit here for days and just talk about all of these small little policies and the second order effects and how really we're running in place.
Yeah, and I think in certain ways, definitely in localized places, we're making it a lot worse. Right?
Yeah.
Well, I would say, let's just say more volatile and more opportunities. Like, let's just keep bringing it back to trading.
The trader.
Back to the trading.
I'm ready, private equity kicked me out of the club 2.5 years ago. I'm ready to be a trader.
I mean, look, private equity or equity guys trading stocks are like, oh, commodities is too volatile. I was like, wait, what? This Meta printed this. These things are down 70%. This is down 25%. I'm like, what are you guys afraid of?
Yeah.
I thought natural gas was volatile. I was like, come on, guys. Like, the water's fine.
So when I was at Kane Anderson, on the private equity side, we had traders in LA that would look at stuff, and we'd always talk about who was taking more risk. And they would sit there, you made an illiquid investment. You own 95% of a company. When something goes wrong, what are you going to do? All this. I can sell tomorrow. Yeah. If I'm wrong, I'm out. And I was always like, but you have no idea what that company's doing. You're reading a 10K. And so it's interesting how you think about risk, because they thought what we were doing was the riskiest thing on the planet. I couldn't fathom how they would buy an oil and gas stock, not having seen a log.
Yeah.
But anyway.
Yeah, they're out there. I mean, it's a strange world, but I think at the end of the day, the end customer is probably usually some pension fund or individuals, et cetera, right? And their whole lives they've been talking like how you invest is you buy stocks, how you get rich is you buy a stock, not sell a stock and then buy it cheaper, but buy a stock and then sell it later, right? And so that's ingrained in kind of like the culture. And so there's just this huge bias for those instruments, equities,
Yeah.
right? Huge bias for the equities. No matter how much I can paint the most, like, believe me, we are the house and this casino and we print money and look at the edge and look at this trade. Where do you ever see an 85% trade in your life?
Right.
Yada, yada, yada. You know, and they'd be like, what stock can we buy?
Exactly.
I'm like, okay, buy Energy Transfer. You're not,
Yeah.
you know what I mean? Like,
There you
you
go.
know, buy Energy Transfer. You know, that type of thing. You know, so whatever. You know, I just like, okay, fine. They're never. I mean, I've been in here long enough that it's really hard to raise capital in
Yeah.
discretionary long short in our market. And it's funny because I'll see these hedge funds. They'll be like, we had it down 50% or down 25%. They'll get another $4 billion.
Yeah.
You know,
I
they'll just
know.
start fund 2, $4 billion. Here you go. And I'm like, can we get a $25 million allocation? You know, here.
I know.
I mean, I got 170% return. You know,
Yeah.
can I get a little money? You know,
I used to always be shocked because there's this, you know, the chief investment officer, the CIO, is sitting there, and there's always this. I want a small, localized, focused guy. I want somebody like Bill who really is down in the weeds on this, understands it. But gosh, it's just easier to give BlackRock $2 billion, and I don't have to
just
worry about
ship it.
Because I don't get fired if I hired BlackRock.
No,
you know?
right. Yeah. It's like the old adage, like nobody gets fired for buying IBM, right?
Yeah,
Like
exactly.
nobody gets fired for just being long stocks.
Bill loses my $10 million, I might get fired. But you know,
I think it's some sort of herd mentality too. Like it's like, well, if we're all losing, it's okay.
Yeah.
We all lost. We're all down 25% or 30%, whatever. Things go wrong, right?
Yeah.
We also like, there's no, like, if you invest in a commodity guy and he happens to have a bad year, polar vortex gets him, whatever. Who knows what gets you? It never
Right.
gets, right? Things do get us, right? You know, it's just hard to explain.
Yeah. That's funny. Now, I got to ask, because I will fess up. We've
Yeah.
become such good friends here over the last hour. My crush growing up, I used to race home from school so I could turn on Good Times. Young
Yeah.
Janet Jackson. Oh my
Oh, yeah,
God.
for sure.
Right. I mean,
Young Janet
you're
Jackson.
my age. So you had
Charlene,
this-
when she was Charlene on
Yeah.
Different Strokes, that was kind of my like, yeah, I was like, yeah, she's amazing. You
But-
think about Penny on Good Times.
I'm thinking about Penny on Good
Penny on
Times.
Good Times.
Yeah.
I liked her as Penny on Good Time. I loved her as Charlene on Different Strokes.
Gotcha. Yeah, there you go. So, but the picture, Sugar Shack,
Shack.
from Good Times.
Yes.
So I think this is one of the coolest things in the world that
Yeah.
you bought this thing. Tell me that story.
So do I. So we're actually going to bring up John again. So I always kind of wanted that painting, you know, just kind
Yeah.
of my collection. And John introduced me to Ernie Barnes, and you know, John's a serious art collector. I don't even think he's an amateur anymore. His house is like a museum, but of great works. And you know, I always ask him for advice. And I was expanding on my biggest collection. He says, you should look at this guy, Ernie Barnes. So I bought a couple pieces, and they're cheap, like relatively speaking, right?
Right.
Because given the significance of his work and who he is, and just basically that narrative, right? The narratives he's painting in America are distinctly American, right? Like if you're painting flowers in an ice skating scene, it could be in France, it could be
Sure.
anywhere, right? If you're painting whatever, but the like stories or narratives about Black love or Black joy in the segregated South, et cetera, and those experiences, they're nowhere but America.
Right.
So it's truly American. Forget the don't feel guilty about it. It is what it is. Like nobody feels guilty about, well, the Mayans were wiped out 2,000 years ago. It's like an event that happened, right?
Yeah.
And so when you look at it, it's like, this is a distinctly American art, right? Around here. So this is a narrative. It can't be recreated. He's one of the early masters. You really don't get African-American artists until 30, 40 years after the end of slavery, right? Because you have to have community, right? And these guys have to buy brushes, et cetera. So with that backstory in, and the fact that, you know, it had to be crazy to try and be an artist as a Black person, artist anyway, and then as a Black person in the 40s, 50s, and 60s, right? Like, who the hell thinks you're going to make money selling art,
Right.
painting Black people, right? Like, it's just kind of nuts, right? So you're really passionate about it. And I see this, you know, growing up, Good Times every day,
Yeah.
right? And so I'm like, I want this painting. And I do some Googling and find out Eddie Murphy has it.
Yeah.
So I call Eddie Murphy's assistant. First thing she asked me is, how'd you get my number? I'm like, I have my ways. And so I'm like, listen, I just want to buy the painting. I'm willing to offer, I'm serious, I'm willing to offer $1 million for this painting, right? Because the highest print on Ernie Barnes was like $500,000. And I know that because I bought it.
Right.
So I was the highest print before the auction, right?
Right.
She's like, no.
I am the high bidder. Yes.
I didn't even get the dignity of a callback. You know what I mean? Like, did nothing. Like, eat a bag of dicks, Bill Perkins. That's kind of like, it's kind of like the response I got, right? And so I was like, all right, well, maybe, later he'll sell it or he's not feeling it or whatever. And so John messages me. He goes, what's the name of that piece you wanted, whatever? And I go, Sugar Shack. He goes, it's up for auction. This other one at Christie's. I go, you're fucking kidding me. Sends me the link. I look at it. I'm like, oh shit. And so I'm like freaking out. I'm like, I got to get register, call accountants, wiring money to so-and-so, like get my credit ready. I'm ready to bid. I'm like, wait, fuck this shit. I cannot have my computer go down or whatever. I really this is the piece. I'm going to go get it. And given that, and it was kind of weird because they put it in the night auction, which is where all the expensive pieces go, the Monets and Picassos, but it had a low estimate of like a couple $100,000.
Yeah.
And I'm like, John, what's going on? Like, why? And he's like, yeah, they know something's up. Like something's up. They just said, we're going to go with a low thing and let people go crazy over it. Right. And so I told my assistant, I said, your job is to make sure I'm at this auction. I got to be there in person. I don't want anything to go wrong. So I fly to New York with Lara, and we go visit some art galleries and look at things. And I'm like, I'm not going to buy anything because what if I need the money for this painting?
Right.
And I'm thinking it's going to go for like $3 million. Right.
Right.
So I come in, I walk into Christie's. It's amazing. They have some of the works that are going up for auction. It's really like a beautiful museum when you go and you see these works of art that are either going to be auctioned or have been auctioned that night. And Sugar Shack's right there. And I walk up to it. I'm looking at it. I'm like, Lara and I have a plan. Like, don't act.
Real quick, because so this is I read up on this.
Yeah.
So Eddie Murphy has the original. Ernie did a duplicate of it by hand, 76 or so, right?
Yeah, right.
And that's the one we're talking about.
There's two of these things out there.
Yeah.
So the one that he has, I think Eddie has the one with the Marvin Gaye painting on top, like the radio station on it, because it was on the album. I think the album's, it has "I Want You" on it. Okay. So After the Dance, I think is the name of the album, right? So it's on an album. It's on Good Times. It's in the Culture. It's
because Ernie changed it up after Marvin Gaye put it on the album.
Yeah, he
right?
changed it for the album. So when you buy the album, it has like some fake radio station on.
Yeah,
it,
okay,
stuff like that. A banner hanging in the Sugar Shack, right?
That's so cool.
Yeah. And so Cody, the guy who did the documentary for Genius about Kanye West, right, is there, and this other guy, I didn't know him at the time, but they're like kind of sitting there with camera, and I'm gonna go, oh my God, they're looking at this painting. Guy comes up to me, he goes like, do you know this painting? Yeah, of course, it was on this, whatever. And he's like, yeah, well, we're doing a documentary on Ernie Barnes and his life works. And I'm thinking, oh, that's great, whatever. And I'm just like, oh, fuck. If he's here doing a documentary, some shit's gonna pop off, right?
Trader Bill pops up going, yeah.
So inside my head, I'm like, fuck, it's gonna pop off. It's gonna pop off. So I go in. Somebody took my seat. I had to go sit over in some other area. There's a press behind you, the press row in the back, a whole broker row elevated over here, Hong Kong behind on the screen. Right, big giant screen with Hong Kong brokers with phones. You can see them on telephones, and the auctioneer up front, and this pit, right, and this whole row of press. I go in, it's kind of nice, it's awesome, right? So they're auctioning Monet, 10 million, 50 million, Picasso, this, whatever. And then there was a painting just before it. I think it was not a Monet, it was like a Chagall or something. I don't know. I was gonna bid on it, and I said, "Don't you fucking dare do it, Perkins. You may need the money. This thing could pop off." Thank God I didn't. And so. We go through and, the auction and little golf claps for each time or whatever. And then this thing, the announcer says, so this work, whatever, important, whatever, and we have 21 or whatever bidders that registered. I'm like, 20, there was never 20. Like, and he goes, I'll start the bidding off at 100, whatever. And then it was like, blah, 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 blah. It looks like the trading floor, like back in 93 in the heating oil pit. You know what I mean? And like, it was just, blah, 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 blah. And I'm just like, holy shit. 2 million, you know, I just yell it out, right? And then everybody's like, 2 million, 2 million, 3 million. So it just goes crazy, like that. And then finally, I'm just like, I got to clear these people out. Like,
Right.
you know, I want this. And I was like, all right, we've already passed what I thought it was going to go for. And it just keeps going. And then finally there were 3, and then there were just 2 of us bidding back and forth. And the guy just happenstance to be 2 rows in front of me. And it was kind of empty chairs in between us. And he's on the phone talking to whoever is the other buyer. And we're going back and forth. And it gets up to around 6 million or 6.5 million, 7 million. The guy turns to me and he goes, I'm not going to stop. And then I go, well, then I'm going to make you pay. Everybody starts laughing, right? Like, because you normally like the etiquette,
Right,
you don't
right.
turn to the other bidder, you don't say anything or whatever. And they're like, he does one, he's like, peasant. You know what I mean?
Yeah.
Like, God damn it.
We
And
have one of those guys.
exactly.
Yeah.
Pesky kid, you know,
Yeah,
whatever.
exactly.
And so we're going back and forth, you know, slowly, then quickly, small jumps, then high jumps. And I'm sitting there thinking, taking pause, and I turn to Lara and I go, what should I do, babe? She's like, you're on your own. Like, I can't say anything. Because before this, I said, hey, babe, if anything happens to me or I pass out or anything like that, don't fucking worry about me. Keep bidding. Literally told her those words before we go in there.
That's
Do
epic.
not worry about me. Keep bidding. And so we keep going. And then I was just like, oh my God, like I'm thinking about what am I going to sell in order to buy this piece? I'm like, well, I can sell this. And I don't really need that house over there, do I? You know what I mean? Like, I'm like, how much cash do I actually have? I'm going to have to borrow some money from John in the short term. You know what I mean? Like these thoughts are going through my head, right? Like it's because I only put a certain amount of credit. And actually, I wonder what have happened had I been online. Because I would have broke through my credit limit right around 3 million, right?
Oh, wow.
And I don't know if I could have got approval in time before the hammer dropped, right?
Right.
Whereas you're live, they're just like, well, fuck it.
He's here.
He's here. We think he's got it, you know? Which I did. But so we keep going. And then finally at 13 million, he just goes, bad luck number, I'm out. And I got it. And the place went fucking nuts.
Oh, man.
The place went nuts. I mean, I was like, I don't know what's going on. And I was just ecstatic. I was like ecstatic. I was so happy. Like I stole the police. I was just like, this is amazing. And then, you know, people went nuts and Art World was like, what the fuck? And everybody in Hong Kong is like kind of staring. Like everybody else is quiet. It's me and this guy. And everybody's kind of like, who the fuck is Ernie Barnes? You know what I mean? They don't know, right? Like, because the art market is biased, right? It's biased against American art, except for like the super majors, right? And it's definitely biased against African-American narratives and American arts. And it's just what it is. It's culture. Like there's not this big education. They're not into the narratives. They don't feel weird. And I think that's also partly because, I've said this, partly because of the Black community. Like a lot of people congratulated me. And they were like, we're glad a Black guy bought this work. And I'm like, you guys are fucking crazy. If you want to support Black artists, it cannot be just Black people buying them. You know what I mean?
Right.
Like that's like you gonna go sell your house at an auction. I'm like, I hope 2 people show up.
Right.
Like, what do you mean 2 people? I need thousands of people, right? Really what you want is the Chinese to buy it.
Yeah.
Or the Russians to buy it. Or some French oligarch to buy it. And then when he has it on his wall, he tells a story and everybody's exposed to the artists and the narratives and they want to collect it, right? That's how you support Black art, Black narratives. Not by just the small amount of African-American collectors collecting African-American artists. Art is for everybody. These narratives are for everybody.
And you want Ernie to get that payday in
Correct.
the future.
Correct.
Yeah.
And so, you know, my belief is that things based on a lie eventually rectify themselves. It may not be in my time, but this market is distorted and I'm just buying it cheaply. So I'm buying $100 million painting for 15 million bucks. And yeah, the market doesn't show that right now, but it'll eventually get there. It's kind of like when I sell March, April in the winter. Yeah, it's $1.20 now, but it's going to go out at 0 or is this, you know what I mean? Like that type of thing.
And you're walking the walk on this because we can go see it at the Museum
Museum
of Fine Arts.
Yeah, I have it. You know, I think it's a treasure and that people need to see it. And the museum wanted it and they want to display it. And then somebody also asked to display it. So it's going to go from the Museum of Fine Arts in Houston to kind of like a Sugar Shack display, other Ernie Barnes work in LA. Other people have hit me up to display it. And, you know, I want people to enjoy it. And my kids kind of were like, Dad, you can't bring that in here. I'm like, why? He's like, people know you. They're going to come try and rob it and steal it. We don't feel safe it's in here, you know? So I got to deal with that issue, put it somewhere. I got to find a good place to put it. in one of my places where people don't know it. But I just am ecstatic about it. And I'm happy for the Barnes estate. I'm happy for, there was another painting called Storm Chasers that was for sale at the evening sale. My plan was to pick up both. But I didn't even show up to the evening sale the next day because once I put that print up, I knew like the secret was out. Right. And so that thing should have went, you know, it had the Barnes not gone first, I would have been able to buy that for like 150,000 maybe, you know.
Right.
It went for like was it $2 million? I think it went for $2 million, and it was two Asians bidding against each other.
Oh, that's awesome.
So you know, kind of I was like, well, the gig is up. I can't be stealing black art. Right? Like people think like, oh, we thank you for buying black art. I'm like, guys, I'm a thief. I'm a trader. I see relative to the art market, I see value and I come and buy it and I enjoy it. And I get to enjoy it and get joy out of it while I'm alive for relatively cheap rent. You know what I mean? I was like, you can't tell me this Warhol's $100 million and this is 15. You guys are crazy.
Right.
And there's two of these. You know what I mean? Like, you guys are nuts. You guys are nuts. It's like your biases have distorted your appreciation. And I think ultimately those biases will come out of the market. Maybe not my lifetime, but they will.
Yeah. No, it's interesting because you hear discussion like that and, oh, somebody sold out or whatever. And it's totally wrong for me to try to quote Snoop Dogg because he's so much cooler than I am. But I love his quote about, no, when you're the OG, you get paid.
Yeah,
you didn't sell out. You didn't sell out. So no, I think that's just an awesome story that you did that.
Yeah,
that's so cool.
I mean, I still, everybody's like, it's so cool. I'm like, guys, I fucking stole a painting in broad daylight. Everybody's like, oh, $15 million. I was like, if I bought a G650 for $15 million, you'd be like, good deal. Problem is, you just don't understand the art that I bought. And when you do, you'd be like, fuck, he stole a G650.
Yeah.
So that's how I look at it. But I mean, yeah, people want to thank me, fine, thank me. But you're it's like thanking the thief that comes in and steals your car.
Yeah. No, it's really cool. And you've been kind with your time. I want one last thing. We can be really quick about this because I think this rolls into the book you wrote, Die with Zero. And you were kind enough to come talk to my breakfast club, I don't know, a month and a half ago. And anyway, it was interesting to hear. So give us the punchline on Die with Zero.
Punchline of you guys got a sophisticated audience. So it's a counterfactual regret minimization algorithm solving for net fulfillment. Okay, so I'll re-say it. So basically, I take three variables: your wealth, your health, and your time left here on Earth. And those are the variables, right? And with those variables, I solve for net fulfillment. Because I believe the purpose of life is to be fulfilled, right? And you want your purpose of your life is to have the maximum fulfillment while you are your journey, your vacation here on planet Earth, right? And your vacation on planet Earth is going to end. And so using those three variables and how they change throughout your life, the regret minimization is for maximum fulfillment, right? A chess algo's regret minimization is for checkmate, not to lose, right? A lot of people are running regret minimization for maximum wealth. And I'm like, I don't give a fuck about maximum wealth. I care about maximum fulfillment, right? Wealth is just a tool to help me fulfill myself. My health is a tool to help me fulfill myself. My time that I'm allocated is something that I use up to help me fulfill myself. And I'm like, based on your own values, not my values, the things you like, you want to do, I give you kind of a mental models in order to get the maximum out of your life.
Yeah, no, it's great to think about because I went through divorce, call it 7-8 years ago, and gave my ex-wife plenty of money. But, you know, I was we had just raised the largest fund in Kane Anderson's history, so riding high. And as stupid as this sounds, and as boastful as this sounds, and I hate to be arrogant, but whatever, I'm so glad I went and bought 2 planes during that time. I flew around.
You did.
I went out on tour with Jewel and Thomas Rhett and all these people. I was their roadie, and all that sort of stuff. And yeah, when I get fired, I'm like, oh, shit, I can't really have a plane anymore. That's not practical. But I'm so glad I did that.
Yeah, I mean, I've been matching, like, I've been rich, I've been broke, I've been broke, I've been rich, you know, and, you know, I had a plane, then I had to sell them. I actually sold one to John. And John and John was a hard bargain. Like, you still this bid? No, I'm this bid now. No, you still this bid? No, I'm this bid. I'm like, fuck it, sold, you know what I mean? A guy will not, you know, John is a very, very robotic when it comes to money and trading.
Oh,
like
that's
he
so
cuts,
funny.
there's no quarter for friends whatsoever, right? Anyway, but yeah, I get it. Like you at that time period in your life, these are the experiences you want to have. They fulfilled you, and now you have memory dividends associated with those experiences that still fulfill you.
Yeah.
And you're happy about it. You don't have a regret about it. A lot of people, they have periods in their life where certain things are meant to happen, whether it's spend time with their daughter, go on trips, go on vacations, etc. They don't do them. They get to another period of their life, and either it's inefficient or they're unable to do those things, and then they have regret. And so I look at it at each segment of your life and then the totality of your life so that you die with the least regret as possible. Really zero. Die with zero regrets.
Yeah, no, and that's really good advice, because one of an article I'd read in the Wall Street Journal, call it 20 years ago, had said psychological research shows if you make your money versus given your money, it usually leads to more fulfillment than if you're just given money. And then the other thing it said in there is that generally speaking, life experiences with that money lead to way more fulfillment than objects.
I agree with that.
Yeah.
I agree with that. But I don't tell people that don't buy the object. I'm like, listen, fuck Bill Perkins. Whatever fulfills you, fulfills you. Just be off autopilot, be intentional about it, and then hear the mental models on how to get the most fulfillment.
Yeah.
Right? How to allocate it over your life, right? Like nobody's saving up to go partying at 96.
Right.
If you are, you got problems, or I want your drugs.
Yeah.
You know what I mean? Like you're going to live to 150 or 200, right?
Yeah.
And so intuitively know there's a time, there's a season where we should be max spending and enjoying and allocating certain experiences, right?
Right.
And so this book goes into that concept a lot further, right? And gives you the mental models about how to think about delayed gratification or gratification now, how to allocate these experiences, how to get off autopilot, how to defeat default mode network, right? Like we all have a default mode network. Like when you drive, pretty much in default mode network. Like when you first started driving, you were like, signal, light, brake, whatever, guy, whatever, right? And now you're like, you know what I mean? Doing makeup, right? Like it's because your body takes over and you have this default mode where you do things without thinking. This also happens in work, right?
Yeah.
And actually the habit of going to work. And all our other habits, we go into kind of this default mode network for survival, where surviving is not thriving.
Yeah.
You know? So we start accumulating wealth, accumulating habits that don't necessarily serve our fulfillment. And not only is life finite, but each period in your life is finite. And so, you know, I speak to that and other things in the book. We don't want to do the whole goddamn book, but you know, that helps you save your own life. And people go, Bill, what the fuck are you talking about? Save life. And so I use this because I'm kind of a zealot about this. And I've said it a couple times. So if somebody's drowning on the beach, okay, and you yank them out of the water and you give them out the mouth and water comes out and they start breathing. And they're like, oh my God, you saved my life. Guess what? They're still going to fucking die. They're just not going to die that day. Okay? They're still 100% going to die. So what did you give them? You gave them more experiences, more I love yous, more walks in the parks, more things that they want to do, right? You just give them a little bit more, right? And so when you optimize your life, you get off autopilot, you implement these mental models, you get more experiences, more I love yous, more of the things you want, more fulfillment, same fucking thing.
Yeah, the thing that nailed it home for me, and I'm going to go buy the book and read the book, is when we were talking, I think you were talking about wakeboarding, and you're like, I forget what you said, but my knee's not going to be able to wake.
My back.
Your back.
Yeah.
Your back's not going to be able to wakeboard in 2 years. Fuck it, I should do it today.
Yeah.
I like doing this.
Yeah.
You know, I've only got so many more days that I can do it.
Yeah.
And that really struck a chord with me that morning, sitting in breakfast, and I'm looking down, eating all the bacon and clogging my arteries. But it was kind of like, it was kind of like, he's right.
It's funny how, like, I always say, like, the book is not complex. It's not rocket scientist. Life cycle hypothesis has been out there, which is a lot of this is basically life cycle hypothesis. it's just, you have to get the message across that gets away and sinks into people so they can apply it. And so for you, the light switch for you was, holy shit, wakeboarding, I won't be able to do it. And then it kind of makes you think about it and you're open to it. Because that's what I think people are like, well, what's a good book? I said it's one that goes past people's egos and gets them to think about the world differently.
Yeah.
Right. And so sometimes you have to explain the same thing 50, 100 different ways to get it and sink in. And I'm glad I came, and I'm glad I spoke, and you're going to get some of your life back. You're going to have a more fulfilling life.
There we go. I like that. Well, Bill Perkins, you were awesome to come on. This has been great.
Yeah, it's fun. I'm happy to come on again. It's great blathering. I love blathering energy or all things. I like blathering. Fuck it.
Yeah. And I was about to say, it was nice being on a podcast where I wasn't the coolest guy in the room.
Yeah,
So,
I
cool.
appreciate, that title. I don't know if it's true. I mean, my kids will be like, this guy doesn't know what he's talking about. But yeah.
Well, you know what the story on that is? So Bono and his wife have Jay-Z and Beyonce over to dinner. And I forget who it was. Rolling Stone magazine. Somebody interviews Bono's daughter and goes, how was dinner last night? Jay-Z and Beyonce came over, and the daughter goes, oh my God, I'm just so embarrassed. All Dad did was talk about Africa the whole time. I'm so embarrassed. So Bono can't look cool for his kids.
Yeah,
none of us.
Exactly. I agree.
None of us have it.
Yeah.
None of us have it.
True story. That lifts my spirits a little bit. So I appreciate you having me on.
Oh, absolutely. Absolutely.